Thank you everyone for being here. For over a year now, Montanans have faced skyrocketing property taxes. This tax hike has threatened the livelihoods of working and retired Montanans, forced some to sell their homes and downsize, and put strains on their pocketbooks for countless others. We heard the distress firsthand from Montanans as we traveled thousands of miles around the state with our listening sessions over the past year. Let's be clear, this crisis is one entirely of the governor's and the Republican legislature's own making. We knew it was coming, we knew how to prevent it, and they did nothing. Worse, they deepened the crisis by giving tax breaks to major corporations and left the rest of us, including our Main Street businesses, picking up the bill. Today, House and Senate Democrats are here to announce a plan to address this outrageous tax hike on working Montanans and to build a fairer system to prevent it from happening again. Before I get into specifics, I want to highlight what matters most about our plan. If enacted, we would see a reduction of $214 million in residential property or in property taxes statewide, and $14 million in relief for small businesses. We would also reverse more than $100 million of Republicans' tax giveaways to major corporations, returning that benefit to everyday homeowners and Main Street businesses. Now for specifics, our plan has 3 planks: a homestead exemption that covers primary residences and Montana small businesses, a new fair tax structure for residential property tax rates, and a housing fairness tax credit that provides further relief for working Montanans of low and middle incomes. I'll begin by discussing the first 2 planks, and then I'd like to turn it over to Representative Jonathan Karlen to discuss the housing fairness tax credits. First, our plan proposes exempting the first $50,000 of your home's value from taxation. Montana small businesses would also benefit from this exemption. Second, we are reforming how the state calculates taxes on residential properties. Currently, every residence, whether it's worth $50,000 or $2 million, is taxed at the same rate. Our plan would tax properties at different rates to give working folks the break they will need to make sure their owners of higher price homes pay their fair share. To give an example, the median home in Gallatin County, which I represent, would see a tax cut of 17%, or about $629 a year. I want to add that Montana Democrats recognize that many Montanans find themselves living in homes whose inflated values no longer match their incomes. These folks will receive additional help in the form of the Housing Fairness Tax Credit, which Representative Karlen will be telling you about shortly. Finally, I can announce this morning we filed bill draft requests for this plan. This reflects our commitment to have the plan fully prepared and ready to be presented on day 1 of the 2025 legislature. With that, I'd like to hand it over to Representative Karlen to discuss the Housing Fairness Tax Credit.
Thank you, Senator Flowers. When I talk with voters, one question keeps coming up. How do Republicans with unified control of government start with a $2 billion budget surplus and end with a tax hike? House and Senate Democrats are unified behind bringing solutions for meaningful, immediate, and long-lasting property tax relief. What we're proposing today with a homestead exemption, fair tax rates will reverse the tax shift that's long benefited big corporations at the expense of homeowners and renters. The third component of our plan is the Housing Fairness Tax Credit. Montanans can't control skyrocketing home values, and as a result, working families and seniors are being priced out of their homes and their communities. Our Housing Fairness Tax Credit ensures that folks don't get priced out of their homes by providing a tax credit that offsets property tax costs that exceed an affordable portion of their income. And this applies to renters too, using a similar method. Let's take a scenario. A family earning $80,000 a year with a $4,500 tax bill would get an $875 tax credit. If their taxes go up, the tax credit will also go up proportionally. Another scenario is a senior with a $50,000 income and a $3,500 tax credit. That senior would get a $1,500 tax credit, which again would rise proportionally if the taxes were to go up. Working together with the homestead exemption and the fair tax rates, the tax credit will serve as a backstop to make sure that nobody falls through the cracks. We need real tax relief, and the Republicans' one-off rebates simply don't cut it. The GOP's fiscal recklessness last session is being borne by my constituents every month in their mortgage payments and in their rent. So it's my sincere hope that the GOP will put their money where their mouth is and finally join Democrats on making the state more affordable for Montana families. Thank you, and we'd welcome any questions.
Eric?
On the tax credit, how is that different than the existing property tax assistance program?
Yeah, thanks, Eric. It's a good question. So this is much more inclusive. The existing property tax programs have a lot of restrictions. A lot of Montanans don't qualify, even though property taxes and rent is a significant burden for them. So these programs expand. So the housing fairness tax credit will cover a much broader swath of the population, and working with the tax rate adjustment and the homestead exemption is going to kind of serve as that backstop for renters, for people on fixed incomes, working families.
Does this have any limitations, like does it start at a certain value, or is it just, I guess it tells them to see further to that?
Sure. So I can provide. House Bill 280 from last session, basically it has the same structure as House Bill 280. One thing to note is that the cost is going to be different because by combining this with the adjusted rates and with the homestead exemption, we're going to see that like the fiscal note for that is not going to be accurate because again, it's going to be, the amount of property tax is going to be different. But it's the same general structure. It'll apply for families earning up to $130,000 a year. And again, the real purpose of this is to serve as kind of a backstop so that people don't fall through the cracks, given the other changes in our tax system.
And then maybe for Pat, you referenced, so when you're reversing $100 million in corporate tax cuts and then alleviating $214 million in property taxes people are paying now, so do we end up with a wash of these kind of people? Or we're wondering about sort of if we're cutting revenues in the state at all, and how will that be addressed?
Great question, Holly. And it should be basically a wash for counties and for schools. That's a concern. As we project it now, there will be some cost to the state, and we're looking at this point, $700 to $800 million surplus, and we think this should be one of the highest priorities for using that surplus. Another piece that we haven't touched on today that will also be introduced is to look at some of the loopholes that we've created over several decades for commercial, industrial ownerships and trying to close those loopholes. And when we do, that'll also help to balance the books. Jonathan?
You said that you're talking about a new rate structure, and that would be based on the home price, right? How much would those brackets vary by? Are we talking like, 3% or 5% for the higher ones, or do we know?
Yes, we do know. It would be, there's 6 tax brackets is the way we have it set up. And I think starting from not 0, but starting from 1%, which would start at the $50,000 mark to the $500,000. I think it goes up to, is it 3%? Oh no, I'm sorry. Tier 6 is 1.89%.
Okay. And then that's statewide, that's not locally varied at all, or is it?
It is not locally varied.
So do you have concerns that in somewhere like Gallatin County where the prices are so high that they may hurt people, that may put people in a difficult position because their housing prices may be higher than other parts of the state?
It's slightly different than what we do now. So it's a tiered tax structure. So you are taxed at these varying rates as the value of your home increases. So the first increment is taxed at one rate, the second increment at a higher rate on up. And the highest tax rate right now is also at 1.89. So in that sense, it doesn't change. The other piece of it is that for lower and middle income families in Gallatin County, for example, they'll not only have this property tax advantage with the tiered structure, but they'll also have the opportunity for Jonathan's fair housing tax bill.
How much do they all work in conjunction with each other in terms of if one were to succeed and others fail or whatever? Are they all key to go together?
They're not, I guess there's no essential need that they be connected, but there is a value to kind of stacking, particularly these two bills, because as Jonathan described, it addresses the need for, in a place like Gallatin County where we've got folks that have been living in their homes for a while, and in essence, the value of their home has exceeded what they could actually afford if they were paying that price. And so their taxes have gone up with it, and Jonathan's bill that he described would help meet that need. So there is a value to having those as companions, but it's not required. If you want to comment.
Yeah, I'll just add that, when we modeled this and in working on this, we were looking at both kind of our higher home value counties like Gallatin County, like Missoula, as well as parts of the state where we haven't seen the dramatic increase. And in order to maximize the benefit to people, we need these policies, or we want these policies to be working in conjunction. In Gallatin County, for example, the median home value, which is about $650,000, just with the homestead exemption and the adjusted rates, they're going to see savings of over $600 a year. And that's just with the homestead exemption and the rates. It's not including, say, for those lower income people, the housing fairness tax credit. So I would say if we want to deliver more tax relief, we need to pass this as a package.
It sounds like in aggregate, this proposal would lean harder on the general fund, including its income tax revenues over time. That's right now, of course, we're running a surplus, but as we know, income tax revenues fluctuate. Eventually, the economy will sour and perhaps won't be running a surplus. What happens then?
This proposal reverses the tax shift that we've seen over both in recent years and for decades of residential increasingly comprising a larger portion of the property tax base. And so part of what this does is for, say your $2 and $3 million homes, they're going to be paying more property tax. So this proposal is not just solely relying on general fund revenues by any means.
I would add also that a companion piece that we're not introducing yet today will be to look at the exemptions and loopholes that are provided for commercial and industrial, and that is also going to offset any increase that we might, or any reduction in revenue that we might see to general fund.
So part of what's happened is that our industrial base has declined over the last few decades, right? So some of the money that was historically taxed is just not there anymore, right? Like, how do you, in a big picture sense, like what should the state do about that dynamic around property tax revenues?
Obviously, we're open for business, and I think we encourage any new businesses to settle here and find a profitable place to run a business, and hopefully that will continue in the future. I think what we're focused on is those businesses that are here have seen, we think, inappropriate exemptions and loopholes, and because of those, the burden's fallen on residential property owners because, in essence, it's a zero-sum gain. And if the residential property taxes go up, the industrial commercial has gone down, and that's what's happened, and we want to right the ship a bit on that. Sheena?
I'm gonna ask a non-numbers question. I'm thinking about the politics here. Governor Gianforte has his property tax task force, and admittedly, I'm not up on that at the moment, but I guess I'm curious, we've seen him take those proposals seriously like he did with the housing task force. Has there been any discussion about trying to get maybe some of these proposals in through the task force list of recommendations, or have you looked at their recommendations that they've been discussing so far and what you make of them?
They are really still in flux, and I think they have not coalesced around any specific proposal at this point. Obviously, if they coalesced around this proposal, we would be in step and hopefully carrying this together. But I don't think they're to that point yet, and so we'll have to see what they come up with.
Do you see yourself like submitting it as a proposal, or?
I think they've kicked around some of these kind of similar ideas. I think they just haven't landed on it as clearly as we have. And where our focus has been is helping out middle-income Montanans that are really feeling the heat of this property tax increase and need some relief. And that's where we focused our efforts.
Structurally, how is it that you guys make sure that local governments don't get impacted by the changes in here? Is it because some of it is going to be reduced collections, not just from state money backfilling, right?
It would not affect what the county is receiving. It doesn't limit their 2.5%, and they'd still get that same revenue.
And I can just add that local mills, local government mills float. So when municipalities set their budget, the mills adjust to what's needed to collect that budget. So they will still be able to, there's not going to be an impact on their kind of budgeting process and revenues that they need. And I'll also just add one point on the governor's my task force is mixed up, property tax task force. I think that there's a lot of questions that have not been answered either, including, are they going to be reversing the shift we've seen the shift we've seen from corporate to residential? Are they going to be taxing those much higher value properties at a higher rate? So I think that we really haven't seen anything that indicates whether or not they're going to reverse this tax shift yet.
Who's next?
This is kind of similar, maybe piggybacking on what Eric asked earlier. You're looking at, we have seen pretty dramatic changes in industry in the state, like looking at what's closed down, the Sealy, all of that. Do you see these bills sort of being a permanent fix or just a stopgap to get us to this bigger discussion of, we always talk about the sales tax overall. This was just that Montana looks dramatically different than it did 50 years ago. Our industries are different, healthcare looks much different. Does this get us to a place that we just sustain with policies like this, or is this moving towards something down the road?
Great question. I think we see this as a long-term fix. Obviously, dynamics change in our economy in the state continually, and how we react to those in terms of funding government services is going to continue to change. So I'm not envisioning that this is going to be in place forever. It will continue to adjust, just like we are adjusting or attempting to adjust right now.
Throughout the interim, you guys have heard about and talked about the shift in, from residential or to residential from business, and obviously the chambers carry quite a bit of lobbying around here. How do you plan to reach this proposal to them and say, hey, we're going to increase your taxes because otherwise it's a sales tax, right? Like more or less.
Yeah, another good question. I think the bottom line is the chamber recognizes that in places like Missoula County or Gallatin County that have a high cost of living, the only way that you're going to have employees to run their businesses is if you also address affordable housing. Part of affordable housing is property tax. And so we would hope that they'd see the value of this for the business community as well. And it also will address their own property taxes. And so $50,000 exemption for small businesses is significant.
So here you're talking about both small businesses and corporations, right? And like more taxes on corporation, less taxes on small businesses, it sounds like. How do you draw a dividing line between those two things?
Well, the tax exemption won't divide between those two. They'll both get that. The difference is if we're able to enact this and residential property taxes go down, there will be an increase in industrial commercial. And to a certain degree, it will affect all businesses. The reality is that a $50,000 exemption for a small business is going to be a lot more meaningful, just in terms of scale.
In terms of Ryan Bussey, and he's talked a lot about property taxes in his campaign, he's saying what he wants to see is just the legislature come in and bring the bill that's been brought up and pass sections to sort of equalize those rates across like different classes of tax. Is that something that the Democrats are going to bring in the next session too? Do you see that?
For now, this is our proposal, and I'm sure there will be other proposals that come from our members. Obviously, we've got a lot of smart members out there that are thinking about this as well. At this point, really, this is our flagship proposal, and I'm sure we'll continue to evolve in our thinking, and our own members will continue to evolve in their thinking as we approach this session. But for now, this is our proposal.
You guys started talking to Republicans about this and trying to get some people on board?
Not formally, no.
Similar vein, on Saturday, GOP at their convention, they adopted a plank in their platform saying property taxes should not rely solely on appraisals. And I have no further details about what that means, but I'm curious if you guys have talked about, does the appraisal process need to be reworked, revamped? Can there be additional ways to determine property taxes?
I was not aware of that plank. It's interesting because it's not, property taxes aren't completely dependent on just the appraisal rates. They're also dependent on the tax rate. And so you have to look at all those pieces. And I'm happy that they're looking at that, and hopefully that they're focused on reducing property tax for working Montanans. That's what we're all about. If they've got another idea that can complement what we're doing, or that gets to the same end, we're all ears. But to date, we have not heard that, and we think it's important to get a proposal on the table that we know is going to create a fairer tax system and give working Montanans a break.
I just have one more question. Do you guys need to push for an adjusted tax rate again this session? Like what has been missing from last session, suggesting that tax rate does not need to happen in 2025? Or remains to be seen?
So, Shayla, you're talking about the Department of Revenue. This would, this would be an alternative to just a flat adjustment in the tax rate to neutralize the expected increase in property values. Any other questions? All right. Happy July 1st. Thanks for giving us your time this afternoon. Appreciate it. Thank you.